We're up 1,000 points yesterday. From the open, it really didn't feel like it. A little up and down, but gave a little back overnight. Some minor earnings. CPI 830. Will it even matter? I mean, no inflation, right? We don't have to worry about it. We'll check that out. Ryan Dietrich 835. He'll join us. We got a special surprise from Ryan. I think you guys will enjoy it too. It's Christian and I and the Brunster on this Tuesday. Pre-market prep starts right now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, let's add my charts here. S&P futures trading in the red. Got a little silly after the close. We can talk about that price action. We got all the way up to, where's my charts? Where's my charts? Get my charts up there. We ran all the way up to 58.76 and a quarter. And for you guys that have a good memory, 73 and a quarter was the high on the pre-liberation day before they came out. The 10% across the board came out. Then we found out that was not true. That was a level. We got back to there, pulled off a little bit. Oh, down only 9 handles. That's nothing. The buck pulling back. That had a nice run yesterday. Give it back 19 cents at 101.41. TLT flat 86.22 if you were hoping for lower interest rates. Wrong. USO adding to the gains from yesterday, up 97 cents, 68.57. GLD rebounding a little bit from a bad day, up $1.18. Silver, that's your percentage mover. SLV back over 30 at 30.12. That's 49 cents. Bitcoin having another good day, trying to work its way up to all-time highs, up $1,970. So there's a rundown on some of your commodity futures. Let's have Christian hop on the stage. And Dennis is, we gifted him a private jet from the Stock Trader Network. So he went out to the Alberta game. He was going to try and do the show from the private jet. But he couldn't get a good internet connection. So, Christian, how you doing today? Did it feel like we were up 1,000 points?
Good morning. Good morning. Hope everybody's having a nice day. Yes, it's Tuesday, so nice to see you guys. Was he really at the game yesterday?
No.
The private jet, I didn't think so, but I was like, hey, maybe he went to the game. I know he's a big fan, so a lot of sports.
Let us take time off. Come on, Christian. You've been around long enough. He always goes every once in a while. But no, you had to get the little bit of sports in there.
Well, you got to talk about the Knicks if you're going to bring.
Oh, the Knicks.
3.
Jaylen Brown hurt, man, or is it Jaylen Tatum? Who got hurt?
Tatum got hurt. Unfortunately, could be an Achilles. That's not that's not good. But hey, Knicks were looking good. I think Knicks were already in control of that game. So 3-1. This is going to be very interesting. When's the last time? We'll get off of sports in a second. But when's the last time the Knicks have been in the finals? Any guesses?
25 years ago.
There you go. 25 years ago. 25 years ago, the Knicks it's been since the Knicks have been in the finals.
And I think that they had Patrick Ewing.
Yes.
And they lost to Houston in Akeem Olajuwon.
That could be it. They had a number.
I don't know for sure.
That sounds right. I was a Knicks fan back then. I've kind of not so much, but I'm still watching. I'm watching these games. John Starks too.
John Starks. Yeah. Boy. I got mixed feelings because the Pistons hung on so well against them. So I'm definitely cheering for the Knicks. My best buddy's a big Knicks fan. And also, just being a Detroit fan, you gotta be a Celtic hater. So we'll see. We'll see what happens.
It's getting exciting.
Yeah. So let's get back to the price action from yesterday. We really kind of even at the same place yesterday. Tried to give a little back, didn't. So here we are, Christian. Another 100 points in the higher in the S&P.
I mean, such a big gap up yesterday. That's tough. But what I thought was interesting yesterday was that some stocks kind of gave back, some of those gains in the first 10 minutes or so. So, you got an opportunity. There's some names that kind of fell a little bit. There may be a little bit of profit taking. I mean, again, such a large gap up that it's always a bit tough to handle. I'm always a net seller whenever you have a gap up, regardless of if it's 1.5% or 3-4%. And I think that strategy worked, and it kind of gave me a little bit of flexibility as the day went on. But big imbalance at the close yesterday. I think it was $3 billion at the close yesterday. So perhaps some of the leverage funds kind of adding to that with the gamma move that they have to do at the end of the day. But yeah, and then we're right back. I mean, futures were off a little bit, but climbing back again this morning.
As they commonly do. We don't really need that. We got CPI at 835. I'm not expecting that to be a huge mover. I mean, we'll cover it. We'll get the data. We're going to have Ryan Dietrich on today. We scheduled him. We'll get Blue on tomorrow to talk about the PPI. So we'll do a little preview at like 827, 828 with the Brentster. We'll cover that number, see what the impact is. I mean, oil prices have come down. We'll see where we're at on the inflation front. Before we move into today's action, I just want to talk about the price action in the drug stocks yesterday, and whether or not this is just a turn or just peculiar price action. You had the news out of the administration. We're gonna slash drug prices by major percentage points. You hit it. And then I think we had some other news that came back the other way. Do you look at this as just like a dead cat bounce in pharma here that really hasn't changed the trend? Or will you start to put some on the Christian Fromhertz watch list?
Yeah, I mean, really interesting price action. I mean, these stocks were down big in the overnight market, going back to Sunday night and into Monday morning, and they actually reversed and went up on bad news. So that typically, when names have been down decently, and the drug stocks and biotech have been a decent underperformer, and when you get that bad news and stocks actually go up, I view that as a pretty darn good signal. So yeah, I'm going to start looking through this group and looking for something I think that has been holding up fairly well. But could it be that that's the majority of that the bad news is somewhat priced into these stocks? It was a little bit noisy too yesterday. Obviously, when you have the Nasdaq up that much, because most of these biotech names trade there, but the healthcare stocks, they don't. And that's a really nice move. Now it kind of goes along the line where we got a big decliner this morning in that space. But yeah, I mean, I'll be looking for long opportunities. I think that's something that you want to see after a decent decline, is stocks actually go up. So what's going on this morning in UNH, Joel?
This Andrew Whitty is stepping down for personal reasons. Stephen Hemsley takes over as the new chief CEO. Expects to return to growth in 2026. Suspending guidance. I mean, people in the chat here, hey, is it worth a shot to buy the dip? I mean, wow. I mean, I'm looking at the upper right chart. If you bought the dip, you got your head handed to you. I don't know how many up days it's had since then. On the monthlies, I'll give you one monthly level, 332.67. If I was short 100 shares, or if I wanted to go long 100 shares, I'd put a bet out at 333. But this is just an absolute disaster. And I think if you're stepping in here, you better be prepared. Maybe make a few purchases before you find the bottom here in UNH.
Well, I didn't realize that this stock, there's been, since they reported that earnings, I mean, it's kind of been straight down. I mean, that's a
Yeah.
nasty move. So you're not even taking out a bounce or anything. I'd be like, oh, with the market going up, I mean, maybe that is bounce, but talk about relative weakness. That stock, even with the market rallying, has still been down pretty decently. And you're talking about a name that's also, if you look at, Dow futures are lagging a little bit this morning. And I think with UNH, what do you think? I don't know if you've checked, but what do you think? Where do you think that holds up in the, or where is that in the terms of the top holdings of the diamonds, which of course only have 30 names?
Top 10?
Yeah, top. It is the third name, and
Third?
probably will be dropping. It used to be, I think, before they reported earnings, I think they were the top name, top weight in diamonds, because if as a reminder, the Dow is a price weighted index, so the whoever has the highest price stock is the highest weight. So since then, Goldman is now number one in the Dow. Microsoft is number two. So you got UNH, and then Home Depot is right behind it. But I think that should slip that holding back down to maybe number five, and will have less impact. So
Well, you know what? Why not just, it's not performing well. Why not just kick it out of the Dow?
it's a
I mean,
possibility.
is that what we do?
They usually do, but they seem to kick them out once they're all the way on the bottom. They don't, once they're kind of still in the top 10, they tend to leave them. They take them out when it's too late.
Yeah,
Right? Don't they
gotta,
seem to do that? They take them out when it's too late, and then oftentimes then the stock actually rallies because the damage has been done.
Humana, sympathy move here in Humana. Boy, not a good looking chart in Humana either. Who else do you lap into here? Molina Healthcare.
Cigna.
Yep. Down
Oh, look at that!
THC.
Look at that Molina. Go back to MOH there for a
Okay.
second. Look at that! Look at that bottom right chart. Doesn't that kind of look like a Head and Shoulders? I would be watching out for that. Somewhat of a indirect Head and Shoulders.
I think I think relatively these things have held up pretty well. And
They have.
Tenet Healthcare, I mean, man, they had a big day yesterday. I guess maybe they're more hospital related.
Yeah,
Uh,
the hospital stock.
More hospital related. Okay, let's just keep rolling here with the corporate news. I don't know if you
Do
caught the Business Insider tip that expanding their relationship with with Amazon. You got to pop to 244.44. Quickly, you pull back. That's not. Oh man, is that really a level? Holy mackerel. Folks, come on. This is like the easiest level. We got to keep an eye on this. Horizontal line right across here. There was a great Detroit band called the Four Tops, but man, they need to add 1, 2, 3, 4, 5, 6, 7. 7 tops here to 245. I was just called 245. That's a big level. How high did it get? It got to 44.44. I don't know. I don't know Business Wire. I don't know their reputation. I don't know what the whole deal, the contract is. That's a big level. If it gets through that today, then clear skies. And UPS was hit on this a little bit, but that's still trading up 19 cents.
Yeah, it looked like it's a switcheroo for them. Amazon strikes deal with FedEx. And I don't know if they're getting rid of UPS to fill void after UPS pulls back, or is that UPS initiated? But UPS is not really down on this. Um, Cost favorability compared with delivery rival UPS. So they're giving them some favorability there for FedEx.
Yeah. I mean, the both stocks have kind of been in the gutter. UPS more in the gutter. But short term pop, but don't have as good a level in UPS for you. But keep an eye, 245 for sure in that FDX if it does.
Here it is. Weeks after UPS said it was halting its less profitable deliveries for the e-commerce retailer and cutting 20,000 jobs. So UPS was actually dropping out of, I guess, this type of delivery business. So stepping out and FedEx stepping in.
All right, keeping it going here. Coin added to the S&P 500. I believe it's going in on May 19th. Got a nice pop on this one, 299.95, so it's not far off the pre-market high. No daily levels here to keep an eye on. What's the next daily high? Next daily high comes in at 233.40. Christian, what are your observations on price action in stocks going into the S&P 500?
Well, it's kind of funny because we were talking about UNH and the possibility of them getting taken out, but we know that the Dow doesn't do that until they get to the bottom rung. But here you go, you got coin coming in, and this was one that, going back to the last triple witching, this was one that was on the list that might possibly go in. Didn't get the nod there. They're taking Discovery out. What I find really interesting with the price action there in Coinbase, and I thought that this might happen on earnings, and earnings was kind of a dud for them. They did not have a super great earnings report, but take a look at that top right chart that you've got displayed there. It looks like a pattern. Looked like a pattern to me that I see all the way towards once you get to March, April, May. And it's inverted, to give you a little bit of a hint in terms of like what I see. You may not see this, but
I see it.
Yeah, so it looks like we're breaking a neckline there in what kind of pattern possibly?
Inverted head and shoulders.
Yeah, not bad. So if you look at usually what you do is you kind of take that the length, I believe, from the neckline to the head, right? Is that how they do that? Is that how they measure it? And then you could basically extrapolate up, and that's about 206 to 144. So excuse me, but possibly like a 50% move. Sorry, 50%, $50 move. You got about a $20 move this morning. So I think it's kind of interesting here, and it's not. I think with cryptos moving too, Coinbase has kind of been an underperformer. There's been other
really
stocks in
has.
the crypto group that's been trading much better.
Yeah, I think you have to be really disappointed if you're a Coinbase holder and basing it on Bitcoin, because nowhere near that 340 level. As far as observations go, so this is going in, I believe, on May 19th. You do see a propensity for a stock to trade higher. On the actual day, I think it depends on what index it's coming out of, and then what index it has to go into. As far, because there has to be some selling of it to put it in the other index. So it doesn't necessarily mean this is going to keep going straight up and then even have a bigger move on Monday when it officially gets added. I would be like, there's been different things. Like when Tesla was added, I can't remember, but that was just in a rip roaring market, and it was post COVID, and people were going crazy and buying absolutely everything. The one that sticks out in my mind is when Penn was added to the S&P 500. And that stock, and you could correct me if I'm wrong, but when that stock hit $140 in early 2021, that had to be darn near the time that it was added to the S&P 500. So you can go back and check the log on that. So there's definitely, you're seeing a bias to the upside right now. They could continue for the next few days. We'll have to see what the order and balance will be on the actual day that it's added. So let's take a look at that. We've had a couple more over the last week, but insider buys have been kind of quiet. But we do have some insider buys in the market's favorite stock, Palantir, and I got a specific number. Christian, now last week you pointed out to me the top of the VPOC area was 118.85, and you said it has to hold 118.85 for this rally to continue. I've been keeping an eye on that, but now we're in a new week. So where is the area of control on the weekly VPOC for Palantir?
So looking at so no VPOC, but top of the value area for the week is
Oh,
right around 118.15. That would be a level that I'm watching. This was another one, by the way. Yesterday, we're talking about this right in the beginning of the show, that there were names that didn't follow. There were some names that they gapped up, they came in, and then they rallied back up. Trying to think of a name that did that. Uber was a good name that did that yesterday. Palantir was not one of those names. So it gapped up, gapped up all the way to about 123, but did not hold the gains. And it came all the way down to 118. So some support there at 118, which is that right around that level that I mentioned to you last week. And it's kind of holding there. So, kind of lost a little bit of that momentum. It wasn't the, buyers didn't go right after that on the little, on the give back yesterday. But I would bring up the 1 hour, if you can, bring up like the 1 hour chart of Uber yesterday. If you look at the difference of what Uber did in intraday yesterday, was pretty interesting, because again, the gap ups, like, you didn't have to chase that gap up. Uber opened up around or rallied all the way up to about 87.50, somewhere in that area. Came all the way down. I mean, this is a $5 move, all the way down to, like, a little bit inside 83. So went down to, I think it touched all the way around like 82.50, and then rallied all the way back up to 87, 88. So there were these opportunities yesterday. Most stocks, if you look at the change in the indices intraday yesterday, it was very minimal. It was all the gap up. And there was some of that selling in the first 10 minutes and then buying back. But there's a couple stocks like this where they really sold off hard, and then it was bought right back.
Do you know what took out Friday's low by a dime?
It's crazy.
And then there was also another daily low at 82. I mean, on a relative strength basis, if someone pointed out to me that Uber, who had a good earnings report, was not rewarded for it, came down and touched Friday's low. I mean, are you kidding me? And then popped up to end the session. But
and closed at all-time highs.
Yeah.
It's at all-time highs. I mean, what a reversal. That's almost as good as the what the Knicks are doing there. Sorry for the sports reference, but what a comeback.
All right. Insider purchases are not all are created equal, right? I believe that that Palantir one was $1 million, but someone broke the bank. Builders, what's it called? Builders First Source, $50 million inside purchase here. I like this. They're trying to buy the dip. Only up 84 cents. I don't know if this is a heavily traded pre-market stock, but man, I would think, I mean, that's a big purchase. I don't know if people are just not putting out any offers on this, but you look for a catalyst for a stock coming off a low. Wow. Well, that's big. 50 mil. That's a big purchase.
Yeah, I mean, I think that's pretty interesting, and that's a CEO, that's a chairman of the company who's doing that too. So the chairman giving a vote of confidence there for the stock, and that's kind of, I think, where we want to see insider buys. I mean, the stock has been drifting lower, drifting lower, drifting lower. It's not in a very strong group, but I used to trade the stock quite a bit when it was in an uptrend. So this is not it's not a home builder per se. They do building products, and they supply the home builders. So I like this. I think that's the CEO coming out and saying this is a big vote of confidence. I believe they're Texas based, this company. So Yeah, I mean, and it's also cheap. This is a relatively cheap trading companies. The PE is about a 13. Estimated PE for December is 14. So I have to say, if you're looking for something that's got a dip, I like the stock here.
Yeah, I mean, it's always great when the housing stocks, housing related turns around. Big pullback on a lot of these stocks, but showing a little signs of life. I mean, we do, I think the big impediment to like the overall, these building stocks is rates, and doesn't look like rates are coming down. But let's do. It's 8:25. We got a rip here up through some earnings. A crowd favorite RGTI traded down a $1.29. They beat 13 versus 6 cent loss. They missed on wow. They really missed on the sales. They're focusing on the missed sales here. Nice move yesterday, RGTI. Not a great report. It did get under $10 in the pre-market. I don't know. I would like to see this thing I saw 5 lows at the 940, 950 area. Christian, any interest in RGTI?
Well, I think just really quickly, I think a lot of these quantum names, they're not going to really trade too much on fundamentals, in my opinion. Quantum chips are far away; they're a couple of years away. So yeah, it's interesting to hear if their names are currently making money. But I would imagine this is these names have a long runway. So would I buy the dip here in RGTI? I don't think it's necessary to do it today. Will I be watching it, for the overall quantum group? Sure. And again, I think you have to have a longer time frame. And I don't. It's almost similar to a biotech company reporting earnings. It's more about like the future, so I would watch it, but I don't think earnings are as important for the quantum names.
I think Mr. T pointed out in the STN room that it got near this expected move before it bounced. So you could check on that. Always a good barometer. C Limited, whoo, blowing it out of the water. How do you like that? Up $19. Nice, a penny beat, and they missed on revenues. So they need something to buy. They're buying the C Limited. This already had the reaction. Not too much comments coming out of me on this. Pre-market high 162.80. I'd look for it to take that out and we'll see what happens on that. Next monthly high, not up to 175.36.
Yeah, they said they see a profit of 410 million for the first quarter, exceeding analyst estimates, indicating the company is performing well against rivals TikTok and Lazada, which I'm not familiar with that company. So really about that they're stealing, I guess, or doing well versus their say stealing market share or doing well versus their competitors. This is a Singapore company. Very nice move, gets you out to new recent highs for this name. Still well under those all-time highs, but making a nice move for the last year or so.
All right, and then before we do, the preview the CPI on holdings, 23 versus 16 beat. Wow, nice beat on sales, 807 versus 571. Revenue expected to be 2.86 billion. I mean, nice gains here. I love my on-ons. I mean, they are great shoes. You know why? Because I don't have to tie them. And you get to be an old man like me. Tying your shoes could be a pain in the butt. I'll just give you some confluence here. Pre-market high 54.33. You had a high at 54.49. A couple highs at 55. So for me, not chasing it. To me, that's a potential sell area. But nice shoes. I like them. On trading into green.
Yes, very nice move there. Looks like they're executing in a tough market. Do we want to get to a quick preview here on the
Go.
CPI?
Yes. Yep. I'll let it go there. We got a minute and a half.
So what I think is interesting here is last month the CPI month over month came in negative 0.1%. They're looking for a higher bar. So whoever sets these estimates, they're looking for 0.3%. So that's an easier bar for the numbers to kind of come under, because they are looking for a tick up, a decent tick up in inflation. So 0.3 is what they're looking for. The core, I don't have the core in front of me what they're looking for, but I think that's also right along those lines. So we'll get this number out in just about 15 seconds. Year over year number is what they're looking for, 2.4%. But again, it's going to be all about that month over month number coming out here in about 10 seconds.
Okay, I will focus on the price action. You guys give the actual numbers. Uh, hmm, First reaction.
0.2 versus 0.3. 0.2 versus 0.3. So coming a little bit less than the expected number.
They love it. The initial reaction was a nice pop up to 58.85 and a half. Really no knee jerk reaction down. We are now above the pre-liberation day high. And let's see if we can hold a bid here. Let's look at the lie detector test. The TLT is popping on this a little bit. Um, Benign data, that's good, right, Christian? That's good. Or is it bad because it doesn't mean that interest rates, that Mr. Powell was right? We don't need to lower rates.
Oh, Mr. Wait and see. He's been worried about inflation. He's talked about that a lot, and that number coming in a bit later than expected. So I think that's good. That's good. That's why we're seeing a nice pop here in equity futures. The dollar's down about 1/3%, and bonds rally back. The 30-year bond rallying back to basically unched this morning.
Yeah, or because inflation's under control. Oh yeah, I mean we can lower interest rates. This whole interest rate thing, and I've been, he caught us off guard. What was it? The end of last year with the pivot. Let's just stay where we're at. We got a little bit of a fade going in the S&Ps, just a tad of a fade off 13 handles, but I think right now, the Bulls are in control as long as we stay green. That close from yesterday, 58.65. That's the high close of the move. So we'll see if the Bulls want to defend that. But right now, there has not little bit of a move down here, but right here, 58.65. That was your close. So it's good. CPI data out looking okay.
And the
2.8. What else?
and
Any other
I was just
fundamental
gonna say
comments on that?
the VIX just dipped all the way below 18. You're looking at a possible 17 handle in the VIX this morning. Holy cow, that's a big move from where we were. Continues to kind of move in the direction of downward. It also finally flipped to contango yesterday. It was the first time that I've seen that in over a month, where the front month is actually lower price than further out. Which was nice confirmation for the whole volatility curve yesterday.
Okay. All right. Still maintaining a bid here. Well off that pre-market low, as I mentioned. We'll be keeping an eye on holding that closing price. I want to see if we got to all of our earnings stocks. Yep, we did cover all those. We're waiting on Ryan Dietrich, Statman due, and we got a big surprise coming up for him. We Let's see if Ryan's in the background yet. If not, there he is.
Oh, go ahead.
There he is, Mr. Dietrich. Mr. Dietrich, give us a thumbs up when you're ready, okay? I see you getting the slides together.
Oh, he's ready. I was
giving
going to
us
say we could cover
a
cyber.
thumbs up.
Save it.
Okay, Ryan, I want your full and undivided attention here for the next 22 seconds. Okay?
Wow, that was good, guys. You've talked about doing that for a while. That was I don't know. I'm on CNBC a lot. They don't do that, so I know I'm in the right spot. Thank you.
Yeah, I can't take credit for it. Josh, our producer, graphic artist behind the man, accountant, lawyer, did it for us. And no, we wanted to do something special for you. I haven't got any warnings from YouTube yet. I think we had a little bit more of a bugle than they do in the actual Batman song, but thanks for coming on a busy day. Last time you were on, you were like standing in front of the bear market. You had your dukes up, and we've had a nice rebound. But that's history, God. Ryan, what do you got for us today?
Yeah, thank you for having me. I think it was April 13th last time I joined, so about a month ago, and that was after the rally, the initial rally, and who knew what was going to happen. We were pretty optimistic. I'll tell you, sometimes I get in trouble with compliance. Hope we don't get in trouble with that video, but hopefully I'm just going to point at you guys and say you did it. No, I'm teasing. Let me get, as usual, I put some stuff together. Let me just make sure I can share it here, and then we're going to get going here. Let's see here. Share screen. Almost there.
Thinking about it wants to know if you drive a Statmobile.
Statmobile. I should after that. I think I need my ringtone to be what you guys played there. I think that would be that'd be good too. Do you see the first slide? It says big picture. I hope you do. You should.
Got it.
Perfect. So I do stats all the time, and for the last 25 minutes I just threw a bunch of stuff in a PowerPoint, and we're going to start talking about some of the stuff we're watching here on the Carson Investor Research Team. Here is a chart that I shared back on April 13th. Of course, it is updated. Just big picture, right? The S&P, obviously, as we know, had a near bear market, pulled back about 19% closing basis. It did clip 20% intraday back around April 8th, April 7th, around then. Pure panic in the air. It was also a 61.8% retracement of the October 2023 lows to the February peak earlier this year, and also the previous peak right at the start of 2022. So, none of this stuff's perfect, but this is a logical area of really strong support. We talked about this a month ago, saying, listen, things could really start to bounce. I'm writing a blog today. It'll come out in a little bit called Carson Research. Or no, carsongroup.com/research. Sorry. And I talk about the idea of the stock market's like a beach ball. The beach ball was really far into the water, but now that we've let go, it has a lot of upside momentum. We're going to talk about that. So that's just one big picture thing. I literally think I've shared with this one with you guys every time I've joined for 2 years now, so we'll do it again. Just how well seasonals truly have worked out. The first quarter of a first year of the 4-year election cycle, where we just had a horrible go of things, is pretty weak. And I get it. April was terrible. Yes, Liberation Day happened. 10% drop in 2 days. No, we did not anticipate that either. But now we're up 3%, I believe, from your Liberation Day. But early in a year with a new president, things don't do that well. Early in the first quarter, last 20 years, hadn't been as strong. The first quarter after a 20% gain is usually pretty choppy and weak. We were on record saying we could have a 10 to 15% correction sometime this year. I've talked to you guys about that, expected it. Yes, we're still optimistic. We manage billions of dollars. We've been overweight equities all year. No, that has not always been fun, but fortunately, things are a lot better now than they were. And honestly, the way our models have done, I'm proud of. We can get more into the weeds of how we're truly looking at the world. We say overweight. Everybody thinks, oh, you must be an all mag 7. No, it's not like that. We get into that, but just big picture, seasonals really have worked out, as I've shared this chart. Did we have another 19% near bear market or correction? Yeah, I think so. We think the lows are in. I've been saying that for a couple weeks now. But you can see here multiple times we've had these close to official bear markets. Listen, I get it. 20% bear market. Who made that up? I don't know. I'm just using the same definition everybody else is. But I know what TV was doing on April 8th and April 7th, right? We all do. They were freaking out. Everybody was bearish. Everyone was in the end was near. Yet, after a 70% rally plus off the October 22 lows, we just had a 19% near bear market. Maybe it was just necessary to flush out the weak hands. I will skip to this one. Were there any clues? I don't know. The envy of the world was what we were being called by the economists, and I think it was October last year, and then near the lows, how a dollar crisis could unfold. I mean, you talk about a differing of opinions just from an anecdotal point of view. That's a pretty big deal. And then the S&P's virtually flat on the year. I mean, crazy to think. We were down 15% April 8th. Now we're virtually flat on the year. Can we get back to positive? Of course, we're like almost a positive. Can we finish there? I mean, we think we can. I mean, I think the slingshot effect is still in play, and we're still going to have some good upside here in the second half of this year. And I'm going to list a lot of buying thrusts and breadth thrusts and stats I'm known for here in a minute on why the second half of this year still looks pretty darn good to me. But you can see here, guys, only 3 times were we down at least 15% on the year at some point, and then made it higher. What were the years? They were big years. 82, 2009, and 2020. The other 13 times we were down at least 15%. Yeah, well, we didn't get back to positive. Now, the good news, if there's good news, we were down 15% in April, meaning there is more time to go. So just some context there. Now, let's get into some fun stuff. Sell in May, go away. I mean, I've come on with you every year talking about not necessarily. Well, May just by itself's been higher 9 of the last 10 years. So maybe we call it sell in June. Then you can see here just those next 6 months, or the 6 months we're in from May through Halloween, higher 8 of the last 10 times. Just context around, yes, historically, these are the worst 6 months. They haven't really been lately. When you look at all these buying thrusts and things I'm going to mention here very soon, we would by no means suggest sell in May and just go away. Just yesterday, Jeff DeGraff, big fan of him over at RenMac. They call us the DeGraff buying thrust. He's coined it. More than 58% of all the components in the S&P 500 yesterday made a 20-day high. So think of it like a monthly high. It's a big thrust. Jeff has said 55% is that magic number where it matters. This is data from Ned Davis Research. Trust me, different data sources might have a little bit different, takeaways, but this is ballpark pretty accurate. You can see the returns pretty darn strong, but a year later, higher 29 out of 30 times. 29 out of 30 times after what just happened yesterday. That's one data piece. No, you don't blindly invest just because of a cool thing that Jeff DeGraff has found, but I don't think I would ignore it. I look for clues like, is the worst over? The options markets are pretty smart. The credit markets are pretty smart. We talk about that every time I'm on. The VIX closed beneath 20 yesterday. Now, listen, we've had a huge rally from the time the VIX initially spiked above 50, whenever that several Mondays ago. But once your VIX closes beneath 20, I started the clock again, just starting yesterday. You can see here 5 times we had a VIX above 50. And then it took a while in some of these cases, sometimes not that long at all, actually, to get sub 20. Only once did we go on to make new lows. And that was in 2015, 2016. All the 4 other times when the VIX spiked above 50, got below 20 on a closing basis, the lows were in. You can see the yearly return never lower. I get it, small sample size, and a yearly return of 9% is not like wildly spectacular. But at the same time, what I'm looking at this one is, the odds the lows are in is something we've been saying for a while, and it looks legit to me. I always look at what I shared with you guys last time. I shared this one last time. I thought it was interesting because I kind of forgot about it, to be honest. April 9th, 98.6% of all the volume on the NYSE was positive. You can look there. That's like the highest day we've ever seen in history. I think I've got data back to 1980. Yeah, back to 1980, thanks to Ned Davis. Again, it is what it is. 1 month later, look at those returns. 3 months later, look at those returns. And I probably should have updated this. I didn't, but I'm not sure what we were 1 month off of April 9th. I think like 13%. Okay. So, we've seen a significant rally once again after just one extremely strong day that is playing out. More clues that the lows are in. We're up over 13% in 1 month. Okay. I guess starting on April 8th. So right before that big day on April 9th, but up 13% in 1 month. Now, let's not forget, the month before that, down 12%. One of the worst monthly returns ever. And all of a sudden, you fast forward 1 month, now we're looking at one of the best monthly returns ever. We've been talking with our financial advisors and their clients. The best and worst days happen around each other. And people get upset when I point this out. I don't know why. But if you sell and panic after some of the worst days, you 9 times out of 10 are going to miss the upcoming best days. It's one thing we've been talking about nonstop. And that's exactly what happened. But guys, here's where it matters. After previous 1 month gains of 13%, like we just saw, you see the numbers there, 1 month, 3 months, 6 months, a year later, continued strong outperformance is perfectly consistent with a kind of a new bullish phase. So to me, that buying we saw the past month is not a bear market rally. It's likely the lows are in, and we're going to continue to work our way higher. I won't say who, but it's not hard to find it. Some of the well-known bearish economists out there were telling, remember we had that 9-day win streak last week? I mean, it's funny, like, 9-day win streak. Of course we had one. We were being promised or told those only happen in recessions. So spending about 10 minutes and actually looking at the data, no, that's not true. Only 3 times did we have a 9-day win streak in the middle of a recession. The majority of the time you have a 9-day win streak, as I'm sharing here, take place not in recessions. In fact, a lot of times they kick off, they're in bullish phases where you continue to have pretty strong price action. So I like to point out where, I don't know, some of the perma bears are just doing their thing. Good news, I made a joke, number 124. We just recovered half of the near bear market, right? So we had a 19%, 18.9% near bear market. And on April 30th, we corrected or recovered half of that. This is a stat that I shared in 2022, and I get it. That was the 1 year it didn't work. We recovered half that bear market. Then we rolled back over to new lows in October of 22, as most people on this show probably remember. At the same time, I think there's 16 times here. 15 out of 16 times the lows were in. A year later, when you recover, this clock started again on the 30th of last month, higher 100% of the time. Yeah, I don't know. It is what it is. I don't make up the numbers. I just share them. So that's, again, some positives if you ask me. Just a couple more. What do I have here? Okay, we had a really strong 6-day win streak just recently, up over 7% those 6 days. You can see the numbers. Once again, really strong returns going out 3, 6, even out to a year, majority of the time higher when you have that really strong buying thrust. Because what they tell us every time, it's just a short covering rally. It's just a bear market rally. To me, those are like 1 or 2 days. When you have 6 days, 5 days, 9 days of consistent buying, I mean, even yesterday, I didn't really look at yesterday too closely. I was busy, but Dow gap's up 1,000 points. I get it. Points versus percentage. I get it. But still, that's a big gap. The third, biggest gap ever for the Dow. Stocks gap up 2.5%, 3%. We kind of sold off a little in the mid-morning. Okay, we're going to give some back. And then you look up at the end of the day. No, I mean, bull markets usually don't give you a chance to get back in. And what happened yesterday, that sure felt a lot like that. This wide breadth thrust. Who could, I didn't want to talk about this without bringing up everyone's favorite buying thrust. Everybody and their mother was talking about this a few weeks ago. It is what it is. You can see, again, this is when you have the 10-day EMA of advancers declining, very oversold, then very overbought in a 2-week period. We'll keep it simple. Everyone on this show probably knows exactly what I'm talking about. But it tends to happen once again near market lows. You see the future returns. Again, I'm sharing a lot of different building blocks the way I look at the world, that everything we just went through was unfortunate. No, we didn't think there'd be a near bear market. We thought 15% pullback sometime this year made sense, but it is what it is. What's the Lou Holtz quote? Life is 90% how you respond to something, 10% what happens to you, right? I mean, it happened. This bear market happened, or near bear market happened. How are you going to respond to it? Did you panic and sell, or did you look at some of the data, look at some of the things, and then you realize, you know what? Maybe we're going to come soaring back just as quickly, and that's kind of the camp we've been in, and fortunately that's happening. One other one, 3 days in a row of 1.5% gain. That happened, when did it happen? April 24th, so a couple weeks ago. But 3 days in a row of big-time strength, okay? Very rare. Once again, tends to look at those dates. And a lot of people can eyeball those dates and remember those times. A lot of those times were literally the lows. Off the lows, you're up 3.5%, 3 days in a row. Once again, strong performance. I think I'm almost done, I swear. Markets rarely peak in February. I get it. Most of the peaks are either January because you peaked early, or the end of the year because stocks tend to go up. I get it. At the same time, we've been saying this for a while. April or February 19th was the peak. Is it the ultimate peak for the year? I mean, listen, this time a month ago, I might have said, yeah, it might be. But now with all the stuff I'm laying out there, no, I don't think so. We're less than 5% from all-time high. Once again, I do not expect to see the all-time high for the year, or the high for the year in February, which is a good thing. I do have 2 more.
Keep going.
Bottom's what I want to focus on. The number of stocks above their 200-day moving average on the S&P 500 just popped above 50%. You can kind of eyeball that. 50%'s been a big level of support, a big level of resistance, just more little clues that we are in a bullish phase now. Now we've got the 20-day moving average and the 50-day moving average there also. Those are extremely overbought, extremely high. Again, near term, sure, we're overbought. Maybe we do consolidate some, but bigger picture, that 200-day one at the bottom is what I'm really focusing on, saying this trend is alive and well, and there's something happening that's still bullish. Last one. Breadth is strong. Love to look at advanced decline lines. The NYSE advanced decline line is a chip shot away from an all-time high. We've got the S&P 500 already making all-time highs. Yes, small caps and mid caps have lagged, but to me, breadth leads price is how I learned it a long time ago. To see these breadth indicators breaking out the new highs, specifically the S&P 500, which was doing it this time a week ago, are clues, little breadcrumbs that breadth is up there. The rest of the market's going to catch up, right? And again, just reasons we've been overweight equities. This, when I came on with you guys the last 2 years in 23, 24, in our unconstrained tactical models, real money we run for our advisors and our clients, we were running like 91, 92% equities. We can kind of go from 0 to 100. We were very overweight equities, very overweight U.S. equities. Now we're about 71, 72%. We took it down a good deal actually back on March 3rd as we saw some potential worries, potential hiccups. I mean, I came on with you guys in February saying look out for banana peel sometime to late February into March. Now, I think it's more of a two by four to the head, not so much a banana peel, but we were expecting some potential weakness, but we're not just all in US. I know last time I was on you, we've got a decent, I think compared to any other RIA, we've got a lot of exposure to Europe, EFA, specifically Europe. We've had a big part of gold. We sold some of that gold recently. We still have some gold in our tactic models. We've got some bonds, and bonds haven't done all that great lately, but we're still overweight equities, but we have a good deal of EFA in there as well. So we're not just all US. That's how we see the world. And I think that's my last one. So that is my last one. I'll stop sharing. I'll take a breath. I'm sure I talk too fast, but I get excited.
Love it.
What do you guys want to talk about? How'd I do? Yeah, it's almost 15 minutes. There we go. I'll take a breath. Lot there.
Hey, Ryan, that was awesome. I was going to ask you, number one, is there a Dietrich breath thrust coming? Do you have one of these breath thrusts? Are you going to name one of these things? Because I think with all the stats that you put out, I think we could definitely have one of these Dietrich breath thrusts. Is that coming?
Maybe that one up 1.5% 3 days in a row. Maybe I can take that one. I haven't seen anyone take that one, so to speak. So maybe I'll take that one. I need to come up with something, but I mean that's a good point. I need to start getting some copyrights on this stuff or trademarks, whatever the word is. I think now that I've got my own song, I mean I think it's only obvious I start trademarking some of these studies. You guys are probably right.
Well, I think you brought up this stat where the short-term highs, the S&P made what I think you said like 55% yesterday. I think it was. I have stats on Bloomberg 58, but just
it was 58. It was 58, but above 55. Jeff DeGraff's level is above 55, so we were above that yesterday, but it was 58. Yes.
Gotcha. So, do you also look at this in terms of the 52-week, or is that something that will come more down the line?
Yep, I do, but honestly, there's not many. I think only a couple % of stocks are making 52-week highs. I've got that data also. I know what Jeff looks at, and a lot of us is that 1 month because that's going to happen first, and the 52 weeks will come down the line. But we don't have many 52 weeks. Also, I was looking last night at this data. How many stocks in the S&P 500 are above their on a 14-day RSI, common RSI, above 70? So quote unquote overbought. I forget the number off the top of my head. It was only like 10%. I mean, there aren't that many overbought, at least looking at an RSI from a stock point of view, which honestly is a little surprising. But the 1 month new highs is the one we look at first. And obviously it just triggered.
Yeah, it seems to be you get some quicker signals with that.
Sure.
So what I generally look for too is when the market's going up, I tend to look for if there's any major divergences in the market. Clearly with what you presented, we're not seeing that in breadth. It's pretty strong under the hood. What about what's going on? Like I'm watching right now after the CPI report, bonds are actually selling off. Does what's going on in interest rates, or is there anything that's really worrying you? If it's not interest rates, what would it be that would cause more, volatility? Clearly, we're seeing the VIX get back under 18, but is there anything that's really concerning you at this point?
So I didn't get a chance to see. So CPI to come in hot and yields are going up. Is that what's happening this morning? I haven't looked. It just happened.
CPI came in a little bit lower. Initial reaction, bonds higher. Now they're selling off.
Okay. So listen, our potential worry is, I mean, like everybody, of course, trade. One tweet, one angry thing can change a lot of this. We're not going to invest based on that. A potential Fed policy mistake is a big one for us. I mean, we've been saying you don't need short-term interest rates at 4.5% when wages are around 3%. Again, if CPI came in a little lower, we look at CPI, ex shelter. Been talking about this for years. Inflation's not really a problem, and we get it. The Fed is in a hard spot because potentially all these tariffs are going to cause inflation. You can talk to an economist, argue about this, but it probably causes at least a 1 or 2 month jump in prices. We'll leave it there, and that's why the Fed isn't doing anything. So to us, though, the Fed has been late. Okay, we don't need to get into the weeds of it. I'm not a big I don't know if you need a Fed, but I don't know if I can say that on the air, but it is what it is. The Fed hasn't had the best track record, right? Transitory. When we look at a lot of things right now, there are parts of the economy slowing down. Housing, you're trying to buy a house, and with interest rates and things and small businesses and confidence, we need lower interest rates. But I get it. The Fed doesn't want to do it because they're worried they're going to do it right in front of a jump in inflation. We think that could be a policy mistake. We don't think we're going to see this massive jump in inflation. We think the door is open for the Fed to cut. So that is one potential, I guess we'll say, worry that we have. Of course, the action in the U.S. dollar is always, I'm not saying it's a worry, but it's something we're watching. Dollar's been very, very volatile. Clearly, we all know that. So that's one we're eyeballing. And then just, the overall economic growths. I mean, the good thing about it is, like we talked about, or I shared on the slide, virtually, who was it? Goldman just came out yesterday and they had a 45% chance of recession. Now it's 35 because tariffs are going the right way. So everybody who flipped bearish and recessionary this time 5 weeks ago are probably pulling that back a little bit. But listen, the economy is not it's not cracking. I want to be very clear. But is it humming along? Absolutely not. I mean, manufacturing is still struggling in a big way. Services are okay, slowing down. I mean, the labor market's okay, slowing down. That's, again, why we think we need lower interest rates. So those are the big macro things we look at. One other one, yes, stocks aren't necessarily cheap, right? That's why we've been more neutral technology. We've been more neutral some of those big areas. We've loved financials and industrials. Those are probably our two biggest groups. I mean, those are like the top two groups of the year right now, and they're not so overvalued. So there are parts of the market that are overvalued. But those are some of the things we're looking at. But I think the bottom line, put it like this: when in doubt, diversify it out. That's one thing we've been saying on our team. We have been much more diversified this year than we were the last couple. Last couple, we were, all in on U.S., and we thought U.S. stocks would do really well. Well, this year we've kind of been tinkering, kind of making some changes. I really think the opportunity, is in a lot of developed international. I mean, literally Israel's not international. They are international. They're not Europe. I get it. Israel's hitting all-time high right now, right? I mean, Germany, we know hits like all-time highs all the time. I mean, there are a lot of other markets around the globe, those frontier markets, which we don't have a big exposure on, but it's incredible how much they've come back too. It's not just U.S. and India. For the last couple of years, U.S. and India were the two best. Everybody else kind of struggled. Well, now it's like everybody else is doing really well. U.S. and India have struggled, but we think the U.S. plays catch up. But we're much more diversified in the money we run for our Carson partners than we were the last couple of years. And I think that's how we're going to stay, the rest of this year. But still, we like the U.S. to play catch up, I guess we'll say, when all is said and done.
All right, Ryan Dietrich. You know him as the chief market strategist at the Carson Group. That's how you know him everywhere else. But here, you know him as Statman.
Right.
Thanks, Ryan. We'll dial you up again next month. I really appreciate you coming on. Ryan Dietrich, Carson Group.
No, guys, it's an honor. Always have a lot of fun. Thank you for always having me and being great friends and partners. And I love that video. That made my day. So thank you, guys. Have a good one. Thanks all the listeners. See everybody next month. Take care.
Thanks,
okay, Ryan. Let's just take a look. Let's remove Ryan here and get my charts up. Well, first, Fed funds. Not really moving much off this, right? Going out here. September, maybe get a cut here, kind of pushing things out.
Yeah, I mean, they keep pushing this out. I mean, you go back to a month ago, and they were pricing in a May cut. That was going to happen. Clearly, that didn't materialize. Then it was June was over 50%. That's at 8% right now. Then so we keep sliding back here in terms of cuts, and I agree with Ryan. Like I've been in that camp where I've said, hey, the rate is very high, 4.5%. The European rate. Any idea what the European rate is?
Lower than this.
2.5% is where Europe is right now. We're at 4.5. We're very sticky. Powell says wait and see. And I agree with Ryan. I think 4.5 is too high at this point because we're not seeing that growth. That things are okay; they're not horrible. We've all gone to the airport. We've seen the traffic in the airport. It's pretty darn good, but there's other places that are weaker. So I think we should be cutting in interest rates too. But that's just my personal opinion. But I love what he said. Yeah, you've got a chart of IFA up there. I like that. There's more things to invest in than just the U.S. I think there's a lot more opportunities. So I agree. It's good to see other stocks besides just the U.S. that are participating, and could be how it goes for the rest of the year. Look at this guy, Dennis.
Yeah, I came in. I had to say hi to everybody. Everybody thought, I could have medical appointments. I was out celebrating too long. I was out in Edmonton. There were so many rumors. I had to just, cut off those rumors here. I'm actually just in the background here today. So we have a new schedule here, and there's multiple reasons for this. So the main reason is 3 hosts are too many, we've figured, because we don't know who's going next. So when you have 2 hosts, interviewing a guest or talking back and forth, you have a good conversation. You get the third guy in there, and then we're confused. Well, who's going now? Well, who's going now? We're in the background asking that all the time, and it becomes very confusing. So we're just experimenting here. And here's your schedule for the next couple of weeks while we experiment with this. Let us know if you like it or not, if you're finding the show going smoother. Monday, it's going to be Dennis and Joel. Tuesday is going to be Joel and Christian. Wednesday, back to Dennis and Joel. Thursday, Dennis and Christian. And Friday, Dennis and Joel. So that's where we're at. Let us know what you guys think. Obviously, this is just an experiment at this point in time. Nothing is set in stone, but we just want the shows going smoother. And we really found, like, in the background, we're having to ask everybody too much. Hey, are you going next? Are you going next? Who's asking the next question? So when it's only 2 people talking back and forth, one guy stops, other guy starts talking. It's easier to follow, and we don't talk over each other as much. That's the idea behind it. Whether it works or not, who knows? So, because I tend to talk over everybody.
Well,
But
and
anyways,
also
I was listening to that
taking,
great show, guys. So
Okay.
much good information here. You were going to
Okay.
say something. I just talked over you. See, I've just talked over you now.
Yeah, no, I was just gonna. Well, we interrupt each other. We're very good at that. But Christian will be filling in when I'm taking my multiple vacations this summer. So
Yeah, I know. Joel likes to go
that'll
on
be good.
vacation every other week, so we see a
All
lot
right.
of Christian.
Wait a minute,
We-
what?
And I never take a vacation.
I'll send you the schedule, Christian. Okay. We missed a lot. We got a lot to cover. Over in the STN room, I looking at the list here and came up shy. I will talk to you tomorrow with Blue Putnam. My boy Blue will be coming on to discuss this economic data with the CPI, PPI. But that's it for today, folks. Thanks for joining us on PreMarket.